Welcome to a new era of vehicle ownership here in Malaysia. What do I mean? Well, as of 1st of July 2017, Bank Negara Malaysia has de-tariffed or liberalised the motor insurance industry within this country. Now, what does that mean and how does that affect you? Here are 5 things you need to know about the liberalisation of the motor insurance industry here in Malaysia. Well, question number 1 is very simple. What exactly is this liberalisation? Well, as of 1st of July 2017, the old way of calculating how much premium one needs to pay based on set tariffs is now completely obsolete. It is now replaced with a new way which takes into consideration risk profiles for both the policyholder as well as the vehicle. Now, for the policyholder, it includes things like the age as well as the number of traffic offences and summonses one has amassed over the years. Now, for the vehicle, it includes things like additional safety and security features the vehicle has, the location where the vehicle is primarily going to be parked and used most of the time, especially in high theft areas, and also the duration of time the vehicle is intended to be on the road. Now, all these things makes the risk profile for specific individual policies, which will then determine the amount of premium one needs to pay. Does this affect all types of motor insurance? Nope, just comprehensive and third-party fire and theft. Now, will this change the way you purchase your motor insurance policy? Well, no and yes. No, because you're still able to use the platforms that you're very used to, online, agent, whichever way you're comfortable with. But yes, because you will have to do a little bit of research before you land at the policy that suits you the best. Now, in a recent survey with over 4,400 respondents done by our friends paultan.org, one of Malaysia's leading online automotive resources, it is discovered that most Malaysians will make their next decision based on these 5 factors. Number 1 is, of course, competitive pricing. Of course, they are going to be looking for the best value. Number 2 is the speed in which their claims will be processed, especially for claims under 5,000 ringgit. Number 3, they're looking for rewards and specifically for loyal customers and discounts for loyal customers. Number 4, we're looking at unsuccessful recovery claim speed. That's a very important factor. And number 5, they are looking at flexibility in creating the plan that suits them the most. So how different exactly is the price going to be? Well, if I'm being honest, quite a fair bit. I'm going to use my car as the base example here, and yesterday I called 5 different insurers to get a quote. Now, after having to repeat myself to answer questions about both myself as well as the car 5 different times, it can be quite tiresome, but I guess that's okay, and that's something we'll all have to do. Also, out of the 5 that I contacted, only 3 were able to come up with a quotation on the spot. The other 2 required me to send in a copy of my registration card as well as the old policy, and I find that a little bit cumbersome, especially for people who are just shopping around. Now, out of the 3 that came back to me, AIG came back with the lowest figure. Without giving too much away, let's just put the figure at 1,000 ringgit for the policy. Now, this is of course after minusing my 55% NCD, which again still applies. Now, they also offer towing up to the value of 300 ringgit, and I can use this towing service as many times as possible. Okay, next up is Allianz, and they came back with a policy that cost 90 ringgit and 43 cents more than AIG. Now, they also offer roadside assist, but it comes at a price, and the packages that they offer ranges from 114 all the way up to 284 ringgit. But this comes with a whole host of benefits, including a roadside assistance, towing, minor repairs by the roadside, battery and tyre changing services, personal accidents damages covered for both the driver as well as passengers, and courtesy car use between 5 to 7 days. And last but not least is Kunia with a policy that costs 160 ringgit more, and they also have a roadside assistance in terms of towing, but they also have a bump up package that you can pay additional coverage for, which costs 134 ringgit. Now, as you can see, there is a price difference between the 3 policies, and given the same kinds of parameters to work with, you can see that different insurers are already starting to offer different prices depending on the packages that they want to offer you. Okay, so is this a good or a bad thing? Let's look at the pros and cons, shall we? Pros include things like, of course, now that the insurers are competing with each other, you can now expect a higher quality service as well as greater value in the products that they give you. Secondly, you can now create and craft an insurance policy that is based entirely on your needs and your wants. It is down to what you want in your insurance. And last but not least, It is the fact that safety and security now plays a very important feature in how premiums are calculated. Therefore, it further inculcates good driving habits and further safety habits at home when you are storing your car. This creates a better driving environment in general. Now, we cannot deny the fact that with this deregulation, this opens the system up to unscrupulous parties that will probably be doing something to their benefit and to their gain, especially in the way the policies are priced. And it is also not an impossibility to see policy pricing escalating steadily as the years go by. But it all remains to be seen. Now, have you bought your insurance in the last couple of days? We want to hear from you. Tell us your experience.